creep into the stock of the day, though, doesn't it? It is Sigma. Last I checked, shares were up by 22%. That was just a few moments ago, just after noon here in Sydney. SIG is the ticker code. Now, it's been awarded a Chemist Warehouse supply contract. It runs for 5 years, and it's expected to generate at least $3 billion in revenue in the first year of the contract. That sounds like a lot. And this will give Chemist Warehouse the rights to acquire non-core assets from Sigma. The CEO is talking up the scale and momentum that this deal does do for the company, Sigma Healthcare. So back to my guests, who've not had a chance to say a lot so far. Philip Pepe from Shaw Partners, Sigma Pharma. I know you're pretty keen to talk about this one today. $3 billion in its first year of revenue?
So Chemist Warehouse currently is supplied by two companies, Sigma Health and EBOS. So there's two parts of the contract. So Chemist Warehouse is a pharmacy store. It does pharmacy, also does front of store. Actually makes more money out of the front of its store than it does through the back of its store. It probably does 80% fast-moving consumer goods, 20% prescriptions.
I was there on the weekend and picked up a bunch of stuff I didn't know I was going in there for.
Same as Bunnings. You walk in, you don't walk out empty-handed, which is why they didn't like working from home or shopping online, because nobody walks into Chemist Warehouse just for what they wanted to buy. They walk out with 5 different other things that are on sale. So the current contract is split between EBOS, which is listed, and Sigma Health. So EBOS does the prescription bit, back of store, which is worth about $2 billion. And Sigma does the front of store, which is worth about $1 billion. So you put the two together, there's $2 billion. So that's how, sorry, I guess $3 billion. That's where the $3 billion contract comes from. If you go back a few years, Sigma used to have the whole contract, used to service the whole contract.
I remember that, and then they lost it, which was devastating for it.
It was. They lost it to a combination of EBOS and DHL. DHL actually took on the front of store component, was never able to service it, never actually took it on, so they actually stayed with Sigma in the end. So it was a massive stuff up by the DHL group, which is a large logistics company. That shows you how complex this contract is. DHL couldn't service it. That $1 billion went back to Sigma, and it's been there for 5 years. This contract's still got 1 year to go. Because of its complexity, if Chemist Warehouse is going to make a change, it needs to flag 12 months in advance, which is what it's basically doing. So the current status quo will remain for 12 months, and then 1st of July next year, the whole $3 billion transfers back to Sigma. It's currently got $1 billion. So on a pro forma basis, Sigma does about $3.5 billion revenue. This will take it up to $5.5 billion. So it's a 60% increase in revenue, proportionate increase in profit, you would have thought. A couple of extra things. As part of the transaction, Chemist Warehouse will end up with about 11% of Sigma. That's important because this contract comes up for renewal every 5 years, and if your major customer is also a major shareholder, chances are it's not going back to EBOS in 5 years' time because you're now dealing with a related party. So it was a good win for Sigma. I forecast the company, I have it as a hold. I assume the status quo. I thought the EBOS might fight a little harder to keep it. Compelling offer put forward by Sigma, obviously, which Chemist Warehouse has accepted, hence the share price reaction. So if you go back a number of years when Sigma had the full Chemist Warehouse contract in full flight, stock was $1.30, $1.50, it's still only 80 cents. Not saying that's where it's going, but it's, when I saw the announcement, I thought the market will like this, even though Sigma's basically writing a $100 million check to get the contract. It's still very positive from a Sigma point of view, and it helps management receive its medium-term objectives, which is to get EBIT in sort of the 1 to 2 or 1.5 to 2.5% range. So good outcome for Sigma. I thought an EBOS is down, I think 12%.
Yeah, 14% now by my numbers. Okay, so let's just talk about this just for a touch. So you've currently got a hold rating on Sigma. That was pre this contract announcement. So do you reckon that there'll be a re-rating of this company? Like, where would you put the price target?
Look, we've seen it. I need to crunch the numbers, and I couldn't tell you anyway. Which is why I didn't crunch the numbers. But I mean, it's the share price is up 20%. So one would assume consensus will lift by 20%. Checking this morning, there were a few sells on the stock. I mean, because
there's a sell from Citi, underweight Morgan Stanley. Everybody else is sort of a hold or neutral.
So there was always some chance that someone was assuming that Sigma would lose their component. their own component because it could have got all to EBOS. So anyone who was assuming that will have to put through material upgrades. So we will see consensus upgrades overnight, no doubt, at least in proportion to today's share price move. So
is it a buy, hold, sell today?
I have to say hold because I've currently got a hold, but I don't think it's going down anytime soon.
Yeah, but do you think that the uplift is now reflected in the price? You know, this contract is now reflected in the price after this 23%?
At this point in time,
yeah.
I'm saying hold.
Trying.
I think that's a fair assumption to make. I think.
Would you buy, hold, or sell this today?
No, I'm not going there.
Why?
The one thing that comes to mind is, I think it was a Roman emperor at one stage that said, "One more victory like this and we're done." I'm more focused on the fact what Sigma has to throw in here to get that contract out of the EBOS. So while the revenue might increase by 60%, I think you will see that to get this contract they would have done major concessions on the margin. I mean, it sounds a lot, $2 billion, but if your margin is very low, I'm pretty certain this will be a low margin contract. Obviously, it's a big blow for EBOS. EBOS is by far the superior operator in that sector. And they took away the contract previously. Yes, they get punished today, but I would still prefer EBOS on the basis of their execution in the past, and they will find ways elsewhere. For Sigma, is that eternal? I mean, is this now gonna? I think it'll tie them in with Chemist Warehouse now. I think, as an investor, there's always these unforeseens that you can't predict, and I think this is a case where Sigma really was in a very weak position. You can, if you open up a 10-year price chart, you'll see that the share price basically has gone nowhere amongst daily volatility. And I think they sort of had to do something because otherwise the pressure just continues building on, and ultimately they might actually end up in serious trouble. This is a survival of Sigma, I think, but does it make them a fantastic investment? I very much have my doubts here. Leopards don't easily change their stripes, and as Warren Buffett likes to say, turnaround stories, they seldom really turn around.
Mm-hmm. You're just name dropping, and any rebuttal or no? Like,
Look,
what do you know? Did you do any work on the margin side?
Yeah, the Chemist Warehouse margins historically, was, I guess, backing out what they've reported, gross margins around 7%, so they're certainly not going to be higher than 7%, but they'd probably still be in the sixes because the company needs to make money because they run a large infrastructure in terms of the warehousing and the trucks. And part of the reality is that when they lost that half of the Chemist Warehouse contract, the infrastructure stayed in place, so they copped operating leverage in reverse. So although who wins in this deal? Chemist Warehouse wins in this deal. Chemist Warehouse always wins. You always back the group.
They also get 24 million in assets or in cash.
But with the alignment of interest, Chemist Warehouse will grow. I believe they will grow. I think they're certainly one of the most recognised brands in the country. I think they advertise on par with some of the big retailers, so they will grow, and Sigma will get pulled along with that growth like they used to. So yeah, it came at a cost, but losing it came at a greater cost. So winning it back, again, you always need to concede something.
That's
Chemist
true.
Warehouse always wins ultimately, but Sigma needed to do something to restore its capacity to closer to 100%, currently around 50%. They got there with this contract win. Share price likes it. I think you'll see analyst upgrades. The risk last time they had the entire Chemist Warehouse contract was that Chemist Warehouse could walk away every 5 years. And they did.
Yeah, no, they've secured that
so
now.
Now you think it's safer because they'll stick around for longer, and because they own 10%, 11% of the ultimate company, they can't squeeze Sigma too much without squeezing their own shareholding because it's a related party now. So I think it's win-win. Chemist Warehouse, I think it's 60% Chemist Warehouse win, 40% Sigma win, but they both win.
Okay. Guys, thanks. We'll move on from the stock